Hey guys, I wanted to talk to you about the Dow Jones Gold Mining Index and a pattern that I'm starting to see develop. And this is not a pattern that I particularly play, but I've seen this happen time and time again, where if you're trying to pick a bottom in the miners, there is something that I see setting up with a fairly defined stop. So if these are going significantly lower, you'll know pretty much where to get out. So I'm just going to go ahead and briefly cover this sector. And basically, if you're trying to pick a bottom in miners, like if you're trying to, when the market is doing this, you're really putting yourself in a dangerous situation because the bleeding has not stopped. Now, here in July, we hit a low and we started to bounce. And the reason why this bounce is a little bit more, and I say a little bit more significant than any of these little bounces, is that it was able to overcome a previous area, like a peak, I guess you could say, like this high. So we made a little bit of a higher high right here relative to this one. So what generally happens at this point is the retest, and that's where we're at now. And you can just eyeball a certain level right around here between 55 and 56, where this is most likely going to try to find some support. And if it breaks down and closes below the lowest low, well, generally you might be able to allow 1 day, but if it closes below that for 2 days, then all bets are off. But generally what will happen is you'll have maybe another day where it starts to break down, and by the end of the day, so it'll rally intraday and close above this level. If it does that, then it's a really safe bet that there's a bottom in, because what will happen is you'll have a positive divergence. You'll be making a newer low on the chart itself, but the RSI won't be confirming it. In fact, you'll have a couple different positive divergences, because here is lower than here, and the RSI is higher than this point, and then you'll have another one. So you're just putting the odds in your side. And let's just briefly, there's a couple of stocks that stand out a little bit better, and most of these charts look a lot like this one. And so what you want to be looking for are the ones that are a little bit stronger, and you'll see them real quick. So AEM mirrors it quite a bit. This one is just horrible. This one has just gotten pounded. Same one, and you can see there's like these little wedges forming. So which way is it going to break down? You just connect these highs and these lows, and there's going to be an explosive move, I think, pretty soon. This is almost like a falling bullish wedge, if you wanted to connect those. And so AUY, this one is a little bit stronger because it's not quite as low. So the ones that are stronger are most likely the ones that are going to bounce the best. And everyone is probably targeting like ones like this, the ones that are the most beaten up, because they think that those are the ones that are going to bounce the fastest. But really, it's these ones. So AUY, CDE, that looks like a mirror image of the Precious Miners Index itself. EGO is not bad, but I prefer, there are a couple bigger ones that I think are going to not be quite as risky. GG, here's one. This one hasn't come down as much, so I think this would be a safer bet. So would gold, GOLD. That's very similar to the actual index. Very similar here, and there's one more, I think. RGLD. Yeah, this one is pretty strong relative to the others in the sector. So those three, GG, gold, and RGLD. I think I said AUY as well, but just want to check. Yeah, AUI. But again, the ones that are a little more expensive, I think you're not putting on as much risk. So I would go GG, gold, and RGLD if you're trying to pick some sort of a bottom in the index. So what you would do is you could buy those three stocks when that scenario plays out, where the Precious Miners Index kind of breaks down, and then use that Precious Miners Index as your stop. Don't use the support on these individual stocks as support, because there's quite a bit of distance between, say, here and down at the bottom.